We'll try to conduct this seminar into two languages, that is English and Hindi as well. Okay, we understand our followers are across the India, right from North India as well, from the South India as well too. And from that perspective, we do have a team of people who can train you into the different vernacular languages as well. If you wish to have the training done into Marathi, if you can do it into Hindi, if you want to do it into Tamil, Telugu as well. So we do have the master trainers into our Urjaa group who can train you into the different vernacular languages as well. Please hit the Urjaa Wealth support line to get more clarity, more information on that point. Okay, this is 11:05. Let's start for the day. Hello everyone. Again, this is Ankush, founder of Urjaa Wealth Group. Welcomes you all on the behalf of the group for this wonderful free webinar. The important topic which we're gonna discuss today is all about the impact of COVID-19, and along with that, this is an excellent opportunity for every one of us to build the portfolio. So certain related strategies which we're gonna discuss, how to build the portfolio, how to pick the valuable investments. Those are the things we will be discussing with this particular free webinar. I will give you an opportunity for one-on-one discussion as well in the last 15 minutes, where I will unmute you guys. You can also drop your queries. You can shoot your queries directly into the Q&A support function, and then we will have the answers sorted out during the webinar itself, during the live discussions. You will also have an opportunity to talk to me in the last 15 minutes. So stay tuned for that, and let's start with the proceeding for the day. So before I start, I will just quickly give you the background on the Urjaa Wealth, how we came up with this. Me and my partners, we were working together since a couple of years down the line, and then we decided to have percolation and the imparting of the knowledge to our followers as well. And that's how we came up with an idea of having and a setup of a training institute where we can actually give a valuable and quality knowledge to the people, to the followers, to the traders, and to the investors. So we are a leading stock market training institute across the nationwide at the moment, and we help our students, traders, investors to realize the true potential of the stock market. That's the most important thing, guys. We never ever recommend any free recommendations. We just put out our free ideas and the logic behind that particular idea, the logic behind that particular trade. We want you to be self sufficient. We want you to be the self independent, so that you are capable of executing your own trades. That's the most wonderful thing you can do for yourself long run in the down, right? If you are relying on to someone else for the free trades and the free tips, probably that might be the paid tips as well, that is not going to help you out. So guys, keep a focus on learning, keep focus on your learning itself. That is going to definitely help you. What we do is we train our student, we train our followers, and then we handle them until they are self-sufficient and until they are able to generate their own profits without our support. This is what is the idea behind this particular training. So this is how we want them to be capable of independent trader, so that you don't have to rely on to certain paid groups, certain free recommendations where they don't really care about your capital. The most important rule into the stock market, guys, preservation of your capital. Saving your capital is one of the best thing which you need to do right in the beginning, and that's how we started, and that's the reason the name here is very unique for us. That's the Urjaa Wealth. So we are not here to earn the money, however we are here to create the wealth for the long term. How to do that? We may have the intraday strategies in place, we may have positional strategies in place, and that's how we go on to accumulate the wealth for the long run. So for that purpose, what we do is we have the Urjaa Wealth as a public channel. I will inform that information here. So these are the offerings which we have. one of the channel that is the Urjaa Wealth public channel, that's free for you everyone, to all our followers, to all our well wishers, to all our students as well. And we post there the free recommendations, free calls for the learning purpose. Guys, keep in mind those are for learning purpose. You need to learn from each and every recommendation. What is the idea behind it? What is the strategy behind it? If you are able to understand that logic, why the particular call or a recommendation is being provided to you, you will be a self-sufficient and independent trader or investor for the long run. We also provide some knowledge enhancing post. We also post some soft copies of the books so that our people are engaged into learning and upgrading their skill sets throughout the day. We specifically focus on to the Nifty and the bank Nifty updates as well, and then the calls which are being recommended for that particular day. Live market updates, which you might have gone through the Urjaa Wealth group postings. You scroll it out, you will understand that how efficiently, how actively we are managing that particular channel. Apart from that, we have the different offerings, different groups or different channels for our students who have a faith on us, who have learned a lot from us. For them, we provide a special services, like we provide them the Urja option access, we provide them the Urja cash and future positional access, which is the most efficient in long run, where we try to earn at least minimum 5% to 20% in each moment. We're going to discuss those points as well. So in Urja option, we discuss specifically onto Nifty and Bank Nifty strategies. We train our students that how to trade onto this kind of calls. And of course, on an expiry day, we have the jackpot calls as well. You might have seen the posting into Urja Wealth that we do have the jackpot calls which have been provided to our Urja option students. We also have the Urja investment picks. This is a new innovation which we have started, initiative idea which we have started, where we are picking up some portfolio stocks. The proven track record of a long-term wealth creation. Those are kind of a companies. Those are kind of a business. We do the end-to-end analysis of the fundamentals and the technicals into this group. So this is exclusively for the people, for the mentees, and for the student who are have the paid subscriptions with us into the particular training courses. We also have the Urja intraday group that is also free for our mentees and the students, and daily 3 to 4 quality intraday picks which we are posting there. You might have seen the postings into the Urja Wealth group as well. So these are the recommendations, or these are the learning ideas which we want to enhance into our public group as well. So this is overall the offerings of the Urja Wealth. This is superficial idea about the Urja Wealth, how we function it out. If you have any queries, please shoot out the queries to me. I will try to answer those queries as much as I possible for me. Let's move on to the next. For today's discussion, I have picked up importantly the three topics. The first one is the impact of COVID-19 onto the Indian stock market. We're gonna discuss the economical implications from the global cues to the Indian cues. We're gonna discuss those parts in industry wise. I mean, I have taken some 3 to 4 industries, and we'll try to explainify those particular industries and how that particular instance is helping you into the understanding of the businesses for at least next 1 or 2 years down the line, how and where exactly we need to pick up the stocks, where we need to avoid the stocks. We're going to discuss that particular businesses around the corner on this COVID-19 topic. Apart from that, we will also have a certain points discuss about the mistakes to avoid while picking stocks, and then importantly the last one, how to pick up the stocks for the investment purpose. I mean, I will specifically see the time constraint on this part. If I'm able to wrap up this within 1.5 hour part, that is well and good. Otherwise, we will continue for the next webinar for these particular topics. Okay, so stay tuned for this discussions throughout. Now, this is an impact of the COVID-19. So basically, if you have seen what is happening across the globe now, is the people are being lived up with the fear of the life just because of one virus. I mean, we have developed so much of the technology, so much of the artificial intelligence, so much of the growth and development which we have seen 100 years down the line. However, because of one virus, everything looks like nullified, right? So, for that purpose, the most important industry which we believe is important here is the pharma and the healthcare. So, anyways, already in India, 44 companies across the globe, not in India, across the globe have been approved for developing the vaccines. And day in and day night, the pharma companies and the healthcare industry is working together hand in hand for testing of the vaccines. And we expect the vaccines to be available into the market at least next 6 months to 9 months down the line. There is a vaccine development process, there is a drug development process which takes a time, and that purpose at least we will have to wait for next 2 to 3 quarters minimum, I'm saying. As per the FDA, it at least takes 1.5 year of time. But however, looking at the pandemic and looking at the deaths, the tolls which have been rising on day basis, I am pretty sure, we as a team pretty sure that the vaccines should be available to the market at least next 6 months or 9 months down the line. So there are certain companies who are on top for this. Pfizer, Abbott, Labs, they are well ahead of the different companies. So these are can be your picks for the day. If you see Pfizer, if you see Abbott, Labs, these are the organization, these are the pharma companies who are exclusively one step ahead of the different companies working together for the vaccines. For the India, the one of the base thing which we have is our autoimmune system. I mean, in India, we are the people who are very, good in immune compared to the Europe and compared to the United States, compared to China as well. So 90% of the patients in India are recovering by themselves, having a good immunity. That is a very plus factor for us, guys. So this is really motivating for us. And based on to the ICMR guidelines, based on to the reports which have been coming up, there are 90% of the patient who are recovering by themselves. That's the good news for us. Now, coming to the moment of the businesses, moment of the stock market in India, since the inception of this particular COVID-19, from Jan onwards, I mean the first quarter of, or you can say the third quarter of 2020, we already had seen 80% correction from the top. If you have seen, we hit the high, lifetime high of approximately 12,500, and from that we already have seen a lot of correction coming down approximately till 7,800. So the correction is already has happened, so there is no point right now in exiting your investment stocks, guys. If you see your portfolio in red, keep it as it is at the moment. Do the review of your portfolio, try to understand which are the companies or which are the businesses who can survive without the business or without the revenue generation for next at least 1 year. If you are able to identify such kind of businesses, then you can honestly can stay with that particular business. So please do not exit any of your businesses now in panic mode, because the correction has already been seen. There is no point exiting at a lower level now. Okay, so this is the first learning for the day, guys. Do not exit your investment stocks at least now. Okay, coming to the next point, if you have seen very recently last week, we had a webinar conference. I mean, it was hosted by India as well. The G20 countries, which decided that $5 trillion fiscal will be infused into the global economy. Can you imagine the $5 trillion in next 1 year down the line is actually giving you a good opportunity to enter and float the prices of the stocks like anything. $5 trillion which has been infused, that will bring the almost, I mean, the interest rate of the borrowings approximately to zero level, which we have seen the Fed cuts, which we recently seen in a couple of weeks back in the United States. Even in India, RBI has cut the repo rate by 75 bps, 0.75 points. That is bringing it down to 4.40. The 4.40 is the lowest since 2008. Can you imagine what kind of support the governments and the RBI is putting down in this particular point of pandemic crisis? Bringing the repo rate down to 4.40, you need to understand in layman's language, it is basically will be giving the finance companies or organizations or the banks with the interest of 4.40. If the borrowings will happen with less interest, absolutely that will be cascaded to the consumers as well, right? So you may see the cut into the home loan as well, because the repo rates are being brought down approximately 12 years low, that is 4.40, that is going to be directly affecting your home loans, right? So home loan interest will be coming down, so there will be a lot of opportunity for the people again to see if they can again able to buy, at least at this moment, any realty sector stocks. But I will discuss the realty sectors in future in next slide down the line. Now, with a superficial analysis with this, it is very much difficult for the companies who are sitting on a borrowed money. There are certain businesses who require the borrowing of the money. For example, stocks like who are involved into the gold import and export, stocks or businesses who are involved into the cementing, like infrastructure, like realty sector. So these are the sectors who will be having a very difficult time, at least in next 1 year down the line. So you can stay away from certain stocks. I'm gonna enlist certain stocks from the realty, infrastructure, and the cement sector as well into the future discussions. Okay, I will do that. So this is another learning for you guys. Realty sector, infrastructure, and the cement sector, you need to stay away at least 1 year down the line, minimum 1 year, and you will have to do the quarterly review of those businesses as well. What is the interest capitalization which is been made into the balance sheet, how stressed is their balance sheet? You will have to understand these overall fundamentals of the companies, and then only you can actually invest into realty, infra, and cement. Okay, so this is another learning for you for the day. Now let's move to towards the description of certain industry wise impact of COVID-19. The first which I'm discussing here is the cementing. As you know, in the cement sector, the borrowed capital is high due to the capital intensive nature of the business. I mean, when they are setting up their infrastructure, they require the capital that needs to be set up, and to bring in with the inventories, they'll need a lot of investment upfront, and that actually puts the stress onto the cementing sector. So the sector is in a precarious position at the time of the COVID-19 outbreak, and actually, unfortunately, it is coinciding with the peak demand of the season. You know, from Jan to June, this is a season where actually a lot of sales of the realties happen. I mean, the purchase by the consumers of the flat, right? So that happens in Jan to June, and the terms of project execution is generally also been done into this particular time frame as well. And unfortunately, this particular COVID-19 impact is seen into Jan to June sales revenues of that realty sector. So that is going to definitely affect a lot the cement sector as well. So revenue, so you will have to do or perform the review required after first quarter of 2021, and then you see that which are the good quality stocks who are still surviving with no business next 6 to 9 months down the line. So what are the stocks you can stay away at the moment are, even from the trading, even from the investment, those are like Kolte Patil, Shoba Developer, Oberoi Realty, Phoenix, Ramco, and JK Cement. So these are the certain stocks we, at least at this moment, you can stay away. Do not think to invest in such stocks for the long term. You will see a good valuations for these stocks coming up in the future, and you may see the drop into the stock prices for this particular businesses in near future as well. So be patient, keep your money ready for such stocks to buy at a very cheaper and valuable levels in the future. So at the moment, we suggest stay away from the stocks. Let's move to the different next industry. That's the raw material and the spare parts. I'm here specifically focus on to the electronics basically and the chemical segment. As you know, nearly 55% of the electronics are imported by India, which are originated from China. So, India has a lot of dependency in terms of importing the raw materials and the spare part from the China. That is really going to affect the revenues and the business in immediate future. So these parts or these imports have already slid down to 40% in light of coronavirus outbreak. So we have already reduced the import of these particular raw materials and the spare parts. And importantly, India is building up their own system of generating or indigenous good manufacturers, or where we can see the space part and raw materials are created in India itself. So this is a countermeasure which not only India but across the globe economies are taking, which do have the impact or do have the reliance onto the China based on to the raw material or spare part supply. So from that purpose, the India is considering the promotion of indigenous productions. The government of India is focusing on to make in India. That is going to be the superb show by India at least next 1 or 2 years down the line. Okay, so in the bid of to reduce the dependency on a single market, and like India, everyone will think from that perspective, and that will be a good opportunity for India to showcase that yes, we can cater with the world, and we can cater with the demand of the world in terms of getting the raw materials and space part created or manufactured in India itself. So, to be very specific onto the electronic segment, as per our fundamental review, Dixon Technologies and Apple India, these are the two good important stocks which we see will be flourishing, and at least we will give 100% return at least in 2 years down the line. Purposely, we haven't mentioned about the actual fundamentals. This is for you guys. You do the homework of Dixon Technologies, do the homework onto the Apple India, but reduced reliance onto the China will definitely put Dixon and Apple on pick. And these are the companies who will be benefited out of this COVID-19 in a very good manner. So you can keep these companies into your radar, on your watch list, do your fundamental analysis, and then see if you can enter into Dixon and Apple India at a very good valuations. It's almost 100%, or you can say almost approximately 100% correction has already been seen into Apple India. It has given the low of 916 so far, which was the IPO breakout technically, which we saw 2 quarters back, right? So from that purpose, Apple India is a good bet, at least from the fundamental point. When we talk about the chemical sector, as we know, there is a lot of dependency on China at this point. So we see a good promising bets onto the Phenotex chemicals, Himadri Specialty, which is a monopoly business itself into the specialty segment. We see Vinity Organics and Deepak Nitrates. These are the four stocks who can be well benefited the shift of the move from China to India. From that perspective, these are the four stocks who can really get benefit out of this shift of the import of the raw material and the creation or the promotion of the indigenous production itself into the India as a part of the Make in India process. So these are the quality stocks. You can do your fundamental analysis first. If you want, we can have one-on-one discussions on these charts as well, on these particular businesses as well, and then move on with the stock price with the buy. Okay, let's go with the next part of the discussion, is your pharmaceuticals and healthcare, one of my favorite at this time. If you see, a COVID-19 is rapidly making its way into India. Yesterday's report by ICMR, which says that we are on the verge of the third stage at the moment. That is actually stressing the pharmaceutical industry. So, government of India has already ordered the pharma companies in India to excessively manufacture the hydroxychloroquine. So this is one of the important aspect to prophylactic use of hydroxychloroquine in terms of fighting against the COVID-19. So the medication is going to be the number one consumer demand at the moment. People with the fear of COVID-19, they want to have the prophylaxis done for themselves. So before they have any particular disease or symptom, they want to take the medications, and the people are actually accumulating this kind of medications that will going to be the number one consumer demand at the moment. That what we see at least one quarter down the line, and that subsequently affects the traders, and the markets are witnessing the skyrocketing prices in terms of the medications as well. If you have seen the reports which are coming from the pharma sector, the vitamins and the penicillin is the third and the fourth generation antibiotic, which already had a very good surge into the 50% pricing. That is going to definitely add into the revenues of the pharma companies. So we see the potential into the indigenous pharmas. One of them is Aurobindo, Lupin, Granules India, Apollo Hospital, and Abbott. So these are the five bets we keep on to for the long-term investment purpose. Absolutely. At this current moment, there has been a relief rally which we have seen into Aurobindo, Lupin, and Granules, and Apollo, and Abbott everywhere, right? See, yesterday's closer, if you have seen, that was pretty good onto the pharma sector. Do not hurry to enter into these stocks at the moment. You will see at least 10 to 20% correction more into these stocks. At the time, you can definitely enter with these stocks. Keep on radar, keep on your watch list with these stocks. So from the positional point, I would like to give you the case study onto the Lupin. What happened is on 6th of April, we provided a positional call to our public group and forum as well. We discuss internally into the students forums as well that what is the idea, what is the logic behind posting this Lupin call, right? So if you can see the screenshot of our Urjaa Wealth, we have this positional cash future Lupin. We recommended, we provided that 655 660 level, and for the target of 675 700 and 725 with a stop loss of 620 as a closing basis. So this was the posting which was done. I will navigate you to the Urjaa Wealth channel here itself, and let's see. Look at this. This is a 6th of April posting which we have done, positional cash future Lupin, and this was Monday. What happened on Thursday is Lupin hit all our targets. The first target of 75, which blasted with 20 points. Second target, that's with 700, which we reached out. And the third target, and 77.25 as per the technicals. However, the follow buying picked this stock to 790 level. So I just wanted to take an opportunity to show you guys what exactly we thought behind posting this call on Monday, 6th of April, so that you also understand the logic behind creating such kind of calls, and you will also understand the expertise which we have into Urjaa Wealth while doing such kind of breakout analysis. So I'm gonna show you that as well. So this, what, the 84,000 in one call, how it has worked. So there is no miracle, guys, on this part. I'm to be very honest. This is absolutely a simple technical analysis which we saw with the price action strategy, which we saw there is a area of confluence, there is an area of price action which I was seeing at 655, and that's how we posted this call. That's it. There is no logic. I mean, there is no miracle behind this, but there is a lot of logic and lot of price action and volume dependency which we saw at this price. I'm gonna navigate you to the actual chart as well, so that you guys understand what exactly we thought on that. It's very simple. I mean, if you have attended my first webinar a couple of weeks down the line, where I mentioned that the double motor formation you can see across the businesses. At the time, we discussed on the Bajaj Finance, we discussed on Aurobindo, which was also a good hit, which we saw SDFC, Nifty as well. So there was a double bottom formation which we was seeing, right? So from that perspective, I was keeping a track onto the Lupin. If you can see here, this chart clearly shows that there is already the double bottom which is already been formed at this level. This is the demand zone which we saw, right? So looking at this, the technicals, there is a doji which has been created here. After that, there is a follow-up buying which we have seen here, and then the date on which we posted this call, the Lupin was already 10% up. However, the area of confluence which was seen at this level, and this is the price which we caught into. So the 50 EMA exponential moving average closer to above to this particular point was the area of confluence. And if you can see, the posting was at around 10:45 a.m. in the morning, and we saw that this is going to be the good blast at least in the future. So 655 was the buying price for us, which was closer more than 50 EMA. That's the very simple logic which we applied. And if you can see this W formation, this we call it as a double bottom formation, right? So this is the neckline which was also broken here. So this is the area of your confluence which we saw, and that's how we posted this call with the target of 725. And of course, after that the follow-up rally was seen and the stock price was hit to 790. So this is about only one call. On a day-to-day basis, we see a lot of calls coming like this into our study forums with our students. Hardly one of them we discuss with the public channel as well, because we don't get a sufficient time to go through the public and explain them everything about what is the logic. But in this free webinars, I will definitely take an opportunity to discuss such kind of heat calls which we saw, and what is the idea behind that particular stock, why we traded on that particular stock at 655. So this is the very simple logic. Your area of confluence, if you are able to understand from the technical charts, that is halfway done for you, and that is the learning which we impart to our students into our training courses. Coming back to the agenda, let's go to the next sector, that's the tourism and the aviation and the travel. Now, this is the sector which I will review, and will see that we need to stay away from this sector. It's very as simple as that. The lockdown across the globe is there. There are no flights running. There is no visa permissions given to the people. There would be no tourism happening across the globe. The lockdown across the India, internal to India and across the India as well. So occupancies and the tariffs at major hotel chains are already been declined, because there are no consumers, no visitors who are coming to hotels, right? The loss of business in this peak season, this April to June is a peak season for Indians to travel around across the globe and in India as well. But unfortunately, COVID-19 has impacted this particular two quarter itself, and that is going to be definitely reflected into the balance sheet of the companies who are involved in the tourism, travel, aviation, and all hoteling business. So the hotel companies usually have the substantial fixed costs, like they have their employees, they have their power, lighting, maintenance, infrastructure cost. I mean, even if there are no businesses coming out to them, but they have to spend onto that. And due to the sharp dip into the revenue, companies with high debt on their balance sheets will have added burden with this fixed interest cost and the shrinking interest. That is going to be the tough spot for these businesses. So at the moment, I recommend you guys, I mean, as per our reviews, these are the stocks to stay away. What are those stocks? Lemon Tree, Mahindra Holidays and Resorts, Chalet Resorts, Chalet Hotels, Oriental Hotels, Royal Orchid Hotels. From the aviation sector, Indigo, SpiceJet. You might have seen the SpiceJet 40% up from the lower of 2014. However, you will again see the same prices coming in the future as well, right? The SpiceJet is trading at around 45 at the moment. I'm pretty sure that you will get SpiceJet around 35 rupees level back again in next at least one quarter down the line. So from that perspective, you keep these stocks onto your radars, at least SpiceJet and Indigo. Those are quality stocks which we consider. And but from the travel, from the tourism industry, Lemon Tree, Mahindra Holidays, Charlotte, Oriental, Royal Holiday, these are the stocks we need to stay away, at least for this moment. Okay, you can take the decision for the long term investment after the result of the first quarter 2021. You see the balance sheet, you read the fundamentals and the technicals, and then take the decision that whether we need to stay into these stocks or not. Now, the summary of the entire discussion here is, we see opportunity into the crisis. This is an optimistic view the humans have. If humans have considered that after the World War II, Japan will die, no, that's wrong. You have seen the human tendency of optimism, and that's how Japan is one of the best economy in the world at the moment, though it was completely destroyed in 1945 World War II, right? So from that perspective, if you see the crisis across the globe from the humanitarian point, humans still have the fight and come back into the zone. So we see opportunity into the crisis. International economies are cautious on overly dependent onto the one market. So I'm hinting here again back to China. If we are having a cautious approach not to depend on to the one market and create your indigenous products in India, that is going to be the best driver for Indian economy, at least from this. The world is angry, suspicious, and doubtful on China. You have seen how China has manipulated the you know the records of their COVID-19 cases in China. The economies will not look for China moving forward. They will try to look for the alternatives when there is no trust onto China. And India has that alternative option. I mean, the economies will start looking at India as an alternative to China. And that is the best thing. What are the positive aspects which we have? If you see, we have a stable political leadership at the government and the governance which has been done. People might not agree to this point with me, but then that's what is the reality, guys. We do have a strong leadership, we do have the strong governance across the board, and the diplomatic relations which we have in the foreign affairs across US, across Europe, across Israel, across Russia as well. So these are the good techs for us. So people from India, so people from United States, from Russia, from Europe, these businesses will come to India than going to China. Make in India campaign also gives you a big boost. The huge consumer and human resource base in India. We are 130 crore population, guys. That gives us the boost into the consumer and the human resource, and that's how the world economies are looking at us. And finally, India is way ahead on ease of doing businesses. So we have done a very fantastic job, at least last 7 to 8 years down the line, since the inception of the Modi government, that I can see. So next year, India can have the huge inflows from the what leaves China. So basically, if you are planning to invest for next 10 years down the line, you do the analysis of certain businesses who are going to flourish because of this COVID-19. I have a list of certain businesses which I gonna share to you into the last slide. So stay tuned for it. Another example I can give you, the CXOs across the Indian multinationals who came together onto the CII forum last week, and they saw potential capturing of the 40% of their competitors' market from China and shifting it to India. So this gives a very good boost into IT sector, the human resourcing sector. So this is where India should look into the future. And current market fall can be the best buying opportunity for the investors, I must say. If you have the free cash which you are not supposed to use at least for 3 to 4 years down the line, guys, start doing your SIPs into the best fundamentally strong quality stocks. Guys, each and every word is important. Quality fundamentally strong stocks which specifically will be able to survive from at least 1 year down the line without no business. For example, let's suppose HDFC Bank has shut down for next 3 to 4 months because of the COVID-19, for example, and there is no business coming in. I mean, there is no distribution of the loans to the retailers, to the consumers. You just think if HDFC Bank is able to survive with this shot? If yes, you invest into HDFC Bank. Likewise, I can give you certain examples, right? So you have a lot of opportunity, and you fortunately, I mean, I understand. Unfortunately, there is a humanitarian crisis, but when it talks about the financials, you are fortunately in a good position to start your investing now. If you are a fresher into the market, if you are a beginner into the market, guys, you need to really go one by one step ahead, right? So for that purpose, you need to learn certain fundamentals, certain technicals, most importantly the psychology, guys. I being a coming from the healthcare sector, I can tell you the psychology works a lot. 100% psychology works into the market, and that's how the technicals works. If you want to have the the demonstration onto that point. I can have the next webinar done onto that particular part as well, the psychology of the traders and investors, and we will discuss that kind of strategies into that webinar. You can have the barbell strategy. Now, what is barbell strategy? Most of you might not have heard about it, right? It's an own a mix of the high quality growth stocks as one end and buy a beaten down relatively valuable stocks. So it's a mix of the combination which you buy certain quality stocks, and also you also buy certain beaten down, relatively beaten down stocks like corporate banks, the PSU companies, the pharmas. The PSUs, if you can see, one of the best example which I always suggest to my followers is RVNL, Rail Vikas Nigam Limited. See, the book value of RVNL is approximately around 18 to 19 rupees, and 2 weeks down the line, it was available at 10 rupees 50 paisa. And from that, approximately at 10 or 11 rupees, it has hit back to 18 and 19 rupees. 80% return, which has been already given by RVNL in just 3 weeks. So the people who heard about RVNL, where we have recommended this particular buying, they are at 10 80% profit already. Another example I can give you is the Trident, which we spoke about last webinar. It has already given you a good hit from 3 rupees to 445 already. So these are the certain good beaten down stocks which you see and you should be investing into an SIP manner. So these are the buying opportunities we see into the crisis of the current moment. Now, this is what about the impact of COVID-19. I will quickly move to how to pick the investment stocks for you. So one of them is the good governance. If you see the enlisted businesses here, there's HDFC Bank, Bajaj Finance, Marico, Britannia, Pidilite, Aurobindo, Grasim, Infosys. All these are the best governance companies in India at the moment. These are the quality companies who have the best governance, best management, the boards of directors at the moment. The first priority has to be this. If you see the case study of the bad governance is your case of Yes Bank. Yes Bank was really doing good until 2017 2018. I mean, at least from the balance sheet, at least from the superficially the public information which was available, Yes Bank was really doing good and fantastic job. And it was the India's largest fourth private bank till 17 and 18. However, the bad governance, bad governments brought down Yes Bank to 5 rupees level. Of course, after that, it has been taken over by SBI and RBI, and they are supporting a lot, having the moratorium and all. That is fine. But the case study of bad governance is Yes Bank. You see that, right? The next part is the business viability. You need to really think 10 years, 15 years down the line, guys, if you are really planning to invest now. If any of the business which is not able to survive with its business tactics in next 5 years, there is no point investing in such business. One of the example I will give is Kodak. It's a very well known into the camera industry. If you are known, right, in 2000 2002, Kodak was the world's best company in terms of providing the cameras, right? However, they couldn't change their methodology of business, or you can say the way they were doing the business. They couldn't upgrade themselves, right? And what happened to that is, after that, Kodak is no more. I mean, the smartphones has taken the place already, right? So if you don't change your tactics as per the consumer requirements, as per the needs, your business is not going to be viable. You need to look into that business viability. I'm giving you the next learning for this particular webinar. Look for the business viabilities. Dependency onto the business on global cues. One of the example I can give you, the steel industry in India. 97% of the raw materials of the steel industry in India is coming from China. Any up and down which happens with China severely affects the steel industry in India. The best example you can see JSW Steel, Tata Steel. So these are a very good governance company. However, there is a lot of dependency of such companies on raw material, on inventory, on China. So you need to really think on whether from where the raw materials are coming up for that particular business. So you do the end-to-end fundamental analysis, how the cash is flowing, what is the management background, what are the business ethics, how they are treating to their shareholders. These all are the criteria which you need to look into when you are picking up an investment kind of a stock. And the last one, which I can tell you, the right valuations. You wait for the right valuations, guys. The patience is the most important key. I mean, if you see towards Warren Buffett, he waited for 10 to 15 years, just waited to come down for the right valuations into aviation stocks. And he got those right valuations in 1985, and since then he is still holding aviations. Very recently he sold his 11% of his aviation stocks into one of the companies into global level, right? So you have to wait for the right valuations. If you see today Lupin is trading at 790, no, this is not the right valuation for Lupin. We are expecting Lupin coming back to again at least 700 level or somewhere down the line. Wait for that particular part. I always tell to the students, wait for the right valuations when taking the entry. If you take the entry at any level, that is going to be affect into your revenues as well, right? So these are the high level examples which we have discussed here. The Aurobindo, Grasim, Infosys, Max Dowers, DMart, IRCTC. IRCTC is one of the best monopoly business in India. At the moment, there is no competitor to IRCTC. We see a lot of potential just because of the lockdown for these 2 quarters, which will be a pain for IRCTC. However, IRCTC will really flourish again and will be back on track. And we see the potential more than 2,000 rupees down the line. But at least it will take 3 quarters of time, guys. Okay, keep in mind. So these are the high levels of examples. However, we are yet to do a depth review on this entire stuff. We're gonna do that review along with our batch 7, which is coming, which is going to be commencing on 18th of April. If you really want to do and join us onto that particular discussions and understanding the fundamentals and learning, you can always reach out to us, and then we will definitely discuss those points. So which can return the potentially 100% in due course. We're gonna pick up certain stocks. We already have picked up certain stocks like RVNL, like Trident. We have already picked up, and those are 80% and 35% already up from the buying price. So we're gonna share such certain ideas to us, our students as well in future, and then which may potentially give you 100% return at least in 1 year. This doesn't happen into your reality sector as well, right? So this is the wise time, lockdown time. You have a lot of free time at home. Invest your time in skilling or upgrading yourself. This is the thing which I can give you as my suggestion. Learn fundamentals, technicals in depth in the professional 21 days of training environment, and learn through the psychology, learn through the fundamentals, learn through the technicals of the entire portfolios. I hope all the webinar students will make the use of this never before opportunity, none of which our parents and the grandparents have it. I mean, you are really fortunate at the moment that you are looking at the liquidity values of all the quality stocks. This is like you are starting your investment in way back 2008, right? I mean, 12, if someone tells you with a time machine that you want to go back to 12 years back, I will say that I would like to start my investment back from 2008. And this is what the COVID-19 has given you the opportunity, guys. So take this opportunity, learn. Do not rely on to certain recommendations. Learn for yourself. You learn it, you master it, and then you trade it. This is the mantra which we have at Urjaa Group. So coming back to this is what the discussions which we had. We're gonna start our batch on to the 18th of April 2020. That will be 3 weeks live webinar, and of course after that the lifetime support from me. I personally look after for each and everyone's portfolios. I personally look after for each and everyone's trading strategies and ideas as well. So any point of time, if you want to reach out to me, I'm always available for you. I handhold my all students, the beginners, until they are confident on trading and investment. Right. So these kind of strategies which we enforce into the Urjaa group. We also provide the 3 months of access of the premium channels for certain people, but however, for students, it is approximately free across for the lifetime. We provide a good study material. We provide a lot of soft copies of the books for our students, the charting constructions, then you have your homeworks done. So a lot of other activities we do on a day-to-day basis from the learning point. So generally I want to create an addiction in you guys about investment, about trading, of course the risk-free trading I'm talking about. So these are the informations which we want. If you want to have any more information, you can reach out to us on our Telegram support. You can also WhatsApp on 8788 945861 for the enrollment of the courses. So these are the courses curriculum which we generally cover up. The technicals versus fundamentals. We learn on to the chart constructions, even for the Nifty and Bank Nifty strategies, how to tackle with, how to cater with the day-to-day intraday movements. So we provide the free recommendations for the learning purpose, the use of closing prices, the trend lines, support, resistances, chart patterns. These are the things which we take into the consideration for our curriculum. We also provide some stock specific strategies which I have already spoken about, the Bajaj Finance and PVR strategies. If you can scroll down to our Urjaa Goal public channel, you will see how efficiently we are managing our stock specific strategies, right? So there are people who just want to learn those specific strategies as well. We are open to discuss those strategies with you. Okay, your volume, your open interest relationships, moving averages, money management, risk management, the importantly the psychology, the reading of the between the line from the psychological point. That how I train you guys. I modify, I brainstorm the understanding of yours in these particular areas. So that's it from the course curriculum which we design for our students. Okay, any questions you have? I am now open for question and answer session for everyone. I will allow you guys now for asking me the direct questions. Okay, so we have already reached out. So hi Neha, thank you so much for joining. I'm allowing Manoj, Anish, Viraj, Swapnil, thanks for joining. Jitendra, thank you so much sir for joining this call. Anand, Khalil, Surya, Radhika, Dina, thanks for joining guys. I'm allowing you guys. You can directly reach out to me for questions now. Thank you so much, Yash. I'm sure you're following us since lot time. Hi Raju. Hi Siva. Thank you so much for joining this. I may expect the questions from you. If you have any questions, please ask me the questions. Hi, hello Harsha, Venkatesh. Hi Shivraj. Hi Abhiraj. So I think the house is already full for us, and you may have the questions now shooting to me. Hi Venkatesh. So let's go back to the questions. So Harsha is saying that voice nahi aa raha hai. I hope you are able to listen to the audio for the entire 1 hour or so. Please speak in Hindi, sir. Yes, definitely, Harsh. I will have the Hindi webinars as well, और मैं हिंदी में भी बात करूँगा आपके साथ. Okay. How about the credit axis? Yes, this is one of our best pick in credit axis, which we have already posted. हमने ये कॉल ऑलरेडी पोस्ट किया हुआ है ऊर्जा वेल्थ ग्रुप पे, and we see at least 10 to 20% up movement in a very short period of time in credit axis Grameen. You need to understand the business of credit axis from the fundamental points. You will be able to see why credit axis is good. What about the crude oil and gold and education sector? We don't see crude oil going more than $40 per barrel at the moment. Recently, yesterday itself, there was an announcement done by the cut into the production by the OPEC, which is going to push the price around in 35 to $40 per barrel. However, decrease in demand will definitely keep the prices at around 30 to $35 per barrel. So, across the globe, there is a lockdown, there is no consumption of the crude, and that's how the demand is already been declined, and that will definitely affect the prices. And that's how the OPEC has decided to cut down the production across the globe. Coming to the gold, you know what guys, gold ये ऐसी एक इन्वेस्टमेंट स्ट्रेटजी है जो जनरली द इन्वेस्टर जो होते हैं वो लोग गोल्ड में, gold is kind of a safe investment for them. When they see that there is an crisis into the equities, they try to shift the money to the gold. So in near future, at least 1 year down the line, we see gold touching 50,000 per 10 grams in India, at least, right? So from that perspective, but at least at the moment, it is a bit already in a overvaluations. You need to wait for certain corrections into the gold, and you can definitely go for the safe investment as such. However, when you want to compare the return from the gold and return from the equities, I, being a moderately aggressive investor, I will always look for equities than gold. Okay, so Chris, the gold probably is a safe investment, but it may not be the lucrative investment for you. Okay, coming to the education sector is always a flourishing in India. Looking at the consumer base in India, looking at the students in India, looking at the young population, India is the first world country where the population of India is from the range of 18 to 45. It's 55% or more than population is coming from this particular age group. Education is always a flourishing business, but next 1 quarter or 2 quarter down the line, education will also have an impact, and people will turn up towards the electronic way of education. I mean to say, the electronic or virtual trainings, point of kind of services or kind of certificates, people will more towards looking at. So try looking at the education sector, the businesses who are actually providing their certificates, their courses into an online kind of a webinars. So those are the good sectors which will definitely flourish down the line. I'm a fresher to the stock market. Do I get any support from your side and guidance to invest of the stock? Definitely, definitely, Chris. I will definitely support you in all sense what I can do. I mean, I don't keep any of the knowledge with me. I am open. I'm like an open book here. You can ask me any questions. I will explain to you, even the technicals. But if you really want to understand the fundamentals and the technicals, I would suggest you to join the training course where I personally mentor you guys. Okay, so that is the first thing which I can tell you, Chris. Then we have Rafi. If lockdown continues, is there any chance for bearish market? Yes, absolutely. I mean, even lockdown doesn't continue, but still there will be at least 1 quarter of bearishness seen. Okay, so we still see at the moment coming back to 8,300 or 400 nifty levels for sure, and that will definitely happen at least when the people, I mean the companies, will start posting their quarter 4 results. At the time you will see the actual impact seen onto the balance sheets. So even if the lockdown doesn't continue, Rafi, we still see the bearishness will be, of course, there would be some relief rallies for a couple of week or so, but however from the long term perspective, the bearishness will be continued at least for next 3 quarters down the line. What is the best level to buy the Bajaj Finance? Absolutely, this is the good question asked by Venkatesh. Thank you so much, Venkatesh. If you have heard my first webinar onto the previous, I mean the previous webinar, I mentioned about the double bottom formation of the Bajaj Finance, and from 2100 level exactly, it has reached to 2560 now. Now, what you need to do in this such moment, I'm not sure what is your risk taking capacity. You should wait for Bajaj Finance coming back to somewhere around 22-2300 level immediately. Okay, and if you are a pro trader, you can take the entry at around 2551, which is a 50 EMA support for Bajaj Finance. And this is what we have internally discussed with our students as well. And a lot of people have taken the entry from 2100 level. So our students has already taken the entry at 2100 level. However, the stock has already ran a lot, at least 20%, which has given a return in the immediate 6 to 7 days. So I would suggest to watch for the Bajaj Finance and enter at around 22-2300 level. That will be definitely gettable for you. Watch it, and you can also ask me a one-on-one questions any point on our support channel, and I will be answering you on the Bajaj Finance. I have already answered for the credit axis, Kaustup. Okay. Sir, please reply me about the credit axis. I have mentioned this with the technical analysis. We see a good momentum picking up into the credit axis, at least 10 to 15% upgrade into the stock prices from the postings which we have done. Could you please provide the slides, Prakash? Yes, I will provide you the slides. Okay, if you require it, I will definitely do that. Thank you, Prakash, for your question. Thanks, Rafi. How about the Apex frozen food, Vinayak? Yes, absolutely. This is a very good ask by Vinayak. Apex frozen food will definitely see a good momentum into this lockdown. I mean, the consumer base is already been increased. I mean, there are a lot of people who are relying on to this kind of the food frozen strategies where they want to get the food which can be stored into for a longer time of period. And this last 3 weeks into the revenues of the frozen food we have seen, I mean, from the reports which we see when we follow the frozen food, we have seen a lot of good revenues which are being generated by the Apex frozen food. So this is really a good time for frozen food. Check your fundamentals, check your technicals, specifically the levels. Okay, and you can definitely enter. If you require any one-on-one support for this, Vinayak, please ping us. I will be definitely helping you out onto this analysis of Apex frozen food. Okay, thank you. What is the base level to buy DMart? Question from Venkatesh. I would suggest to buy the DMart at around 1500 to 1600 level. Okay, so that would be a good opportunity for the people to buy DMart at this level. Okay, this is a good valuation for DMart at the moment. The consumer stocks are always in flourish. I mean, people will not stop consuming the products, right? The DMart is selling, the Avenue Supermart is selling. So anyway, in terms of, even if the lockdown is there, though the 50% of the stores are shut down, there would be an immediate impact on DMart. However, being onto the e-commerce, DMart will definitely push the revenues good, at least in next 2 to 3 quarters down the line. So immediate impact onto the revenues for the quarter 1, I mean the quarter 4 of the 2020, you will see onto DMart. However, it will be really good next 2 quarters down the line. Sir, can you suggest me the book for candlestick movement and strategies to follow the intraday investments? Harsha. Yes, Harsha. I will share a book to you. Okay, I will ask my team members to share a couple of books for you as well, and you can go through that book and learn through it. Okay. Do you expect some correction in bank stocks after quarter 4 results? Absolutely. Yes, Anand. We definitely see a good correction at least happening after the quarter 4 results are being posted by the bankings and the non-banking financials. Okay. But you have to go through the quality governance valuable stocks in terms of banking. There is a lot of stress onto the NBFCs at the moment. So the quality NBFCs are Bajaj Finance, SDFC. Then you also have your uh, bankings into HDFC Bank, Axis Bank, which we have already covered up, and 35% up, which we have already seen into the Axis Bank for our students. So these are the good stock which we can go. Is it okay to invest now in RVNL for short term at 1835? If you specifically ask me for the short term, I would not suggest Anish, okay, because it has in a very in only 1 week or 2 week, it has ran 80% up. Okay, so you will definitely see some correction coming up. The profit booking will be definitely into the RVNL. So you may expect RVNL coming back to around 14 and 15 rupees level. At that level, you can start accumulating RVNL for short term as well. Okay, so keep a track on RVNL, and then you may have a good support coming up into RVNL. Thanks a lot, sir. I will definitely join. Chris, thanks, Chris. Thanks for your questions. According to you, what is the best trading daily or investment and keeping patient? So, yes, I will tell you. It depends on to the motivation you have. I mean, what is your strategies you have? I mean, what I can suggest you is positional trading is the best thing which you can do if you are a beginner. If you are a pro trader and you know the technicals, if you know the fundamentals, then I will suggest you to go for intradays. But if you are a beginner at the moment, in the beginning, I will ask you to go for the cash positionals. Okay, if you have a less capital available with you. Of course, the patience is required everywhere. Patience is required into intraday as well to execute your strategies, exit points, and the targets. So patience is required there as well. Patience is required in holding the positional stocks as well. Okay, if you are confident, if you see the area of confluence is your entry, you need not to worry about, right? This is the basic strategy we discuss into our students in the training courses, and that's the best thing which we can do, right? So it depends. If you're a pro trader, you go for intradays, not bad idea. But if you're a beginner and you want to have a long term wealth creation mindset, go for positional, short term and long term investment. Okay, how about Bajaj Finserv? Yes, absolutely. Kaustubh, Bajaj Finserv has already been corrected at least 60 to 70% from the days high. I mean, from the lifetime high, right? So from that perspective, you definitely start investing into Bajaj Finserv, but you may see Bajaj Finserv again 10% correction still remaining here. So the relief rally which we have seen last week, which will be definitely will be corrected. I mean, the profit booking will definitely happen at that time. You may see a good momentum seen into Bajaj Finserv, and you can buy the stock at a cheaper valuation. The current price, I will not suggest you to go ahead. Look for a certain correction, let it come down to certain level. Okay, and then start taking the entry. Okay, do your technical analysis on this. That's what I can suggest. And if you require any support on doing the technical analysis on Bajaj Finserv, you can ping me one on one. I will have a quick discussion with you, and then we'll explain to you on Bajaj Finserv. Okay. Does any screener tutorials available? Yes, Rafi. We do provide the screeners to you. I mean, we tell you what are the screeners. We do have the paid subscriptions of certain screeners. Okay, those are the best into the industry, and we immediately cascade that information to all our students. So there are screeners, but then if you want to really have a free screeners available, you go to charting. Charting is the best one, which you can actually take into consideration for the tutorials and identifying certain stocks. Okay. Okay, what about Cadila? Yes, Cadila is very good. I mean, Gaurang, Cadila Healthcare is a very good stock which you should be investing at this current moment. And the subsidiary of Zydus is really doing fantastic job into the pharmaceutical sector. This is really a good stock at the moment to invest into. Okay, this is a crucial time for any investor, and having the right balance of value analysis, expertise, and the technical combined with the discipline is a key, without which one can easily make wrong decisions. Thanks for sharing the wisdom at the right time, though, through the webinar. Thank you so much, Siva. I really appreciate your wisdom here as well. So the people who understand the importance of the technicals, in the importance of the fundamentals, they will be definitely on a greener side of your portfolios all the time. People who think that the stock market is gambling, they are not going to stay into the stock market for a longer time. They will blow up their capitals. Even if you have 10,000 rupees, guys, I would suggest you to use that 10,000 rupees very wisely. Invest that 10,000 rupees very wisely. I always tell my students, you consider, even if 100 rupees or even if 1 crore, the valuation is same for you. The way, the seriousness you have for investing 1 crore, the same seriousness you should have investing 100 rupees. If you are able to develop such kind of psychology in yourself, you will be really successful. Okay, sale or buy Bajaj Finance for April month. The question is coming from the Ram trader. So Ram, if you see this, Bajaj Finance has already ran from 2100 level to 25 2600 level at the moment. Depending on to the next week's movement on Nifty and Bank Nifty, the fate of the Bajaj Finance will be definitely seen into. However, we see a little bit of correction into the Bajaj Finance. Profit booking will definitely happen, but the immediate resistance which we see is 2800 level. So from 26 to 20 end, that will be a quick movement which Bajaj Finance can give you, and then there would be definitely a correction which you see. Okay, at this point, 2540 and 2550 was a resistance which it has already passed on Friday, and we need to really see the Bank Nifty and Nifty movement on Monday, and then you will be able to take the decision whether you would like to have a buy call on Bajaj Finance or sell call on Bajaj Finance. So stay tuned on Monday morning. What is the intraday strategies which we apply for Bajaj Finance for at least on Monday? Okay. Any comment on credit access, Gaurang? Credit access is absolutely a fantastic short term strategy at the moment, which we have already posted onto the forum, which we will definitely take care of. Okay. Sir, tell me something about Motherson Sumi. This was one of the favorite of my stock, Deepak. But however, the European Brexit, I mean the which we saw in last year, now Motherson Sumi is really available into a lucrative, valuable prices. You should definitely start buying Motherson at SIP level. Okay. However, the automobile, because it's an auto ancillary stock, guys, right? It supports the clients which Mother Sumi has, all the Mercedes, the Mazda, all your Ashok Leyland, all these people, all these companies will have the decline into the revenue. That will definitely affect Mother Sumi as well. So what I can suggest for you is start your SIPs into Mother Sumi. From the long term, it is going to be really a multi-bagger at least 5 years down the line. Okay, so that's how you can strategize onto the Mother Sunsumi, and you can start accumulating Mother Sunsumi onto the SIP manner. Okay, if you really want to have the technicals on Mother Sumi, you can ping me. I will definitely discuss the Mother Sumi one-on-one with Deepak. Could you please share names of books for technical analysis? Vinayak is asking me the question. One of my favorite book is John Murphy's Technical Analysis for the Financial Markets. The author is John Murphy. This is the best book which I have seen so far. Okay, at least in a very good, simple language, they have explained a very good strategy. So you can try for John Murphy's Technical Analysis of the Financial Markets. You can go ahead. Okay. What is your opinion about Ruchi Soya? Ruchi Soya has already ran a lot, and there was a lot of fundamental turbulence which we have seen into Ruchi Soya. At the moment, I will request to keep. I mean, there are a lot of quality stocks available, Venkatesh, in the market. You need not to go into the Ruchi Soya. Okay, though it is available at a penny level, I would not suggest you to invest any of your rupees, any of your capital into Ruchi Soya, because there are a lot of quality stocks which are available. Stay focused on to the governance, stay focused on to the business viability, right? So any stock which has came from the NCLT, and then someone has brought it and someone is pushing the money into it, and there are a lot of complications. I mean, I really personally don't I will not go into Ruchi Soya, Venkatesh. Okay. Sir, is it okay to invest into IPCA laboratory? Absolutely, it is absolutely fantastic thought to invest into IPCA laboratory, Kaustubh. Okay, but you really need to see the fundamentals and technicals of the IPCA to enter at the right moment. You need to do the valuation of IPCA laboratories. Okay, you do that fundamental and technical analysis and look for what are the opportunities you see into buying it from the long term perspective. Thanks, Anish. Thanks for your appreciations. Yes, of course, that is what is my expectation, that the people should learn from this particular webinar. We do have a question from Vishal Sauni on Indus India Bank. Okay. India's India Bank, we see a lot of stress onto the the NPAs and the balance sheets at the moment on Indus India. Okay, and anyways, there would be a lot of financial crisis coming in, and the fundamentally weak banks will have a heat on it. So this is the statement for Indus India. Now you understand what I mean to say. Okay. So if you are invested, I'm not sure what is your price of investment on this Indus India. However, you need to really think for the first quarter of 2021 how Indus India is posting. If the bank is able to survive with the CASA ratios, then it is really good. Otherwise, you may see another Yes Bank information for in terms of Indus India. Is this HDFC Bank I have at a price of 822? Should I keep it or sell it and wait to correct little bit more? Okay. So, Gaurang, for this, probably I will keep you, I will go on to the chart of the HDFC and I will explain to you on to the HDFC Bank to stick on to. Okay. So if you remember last webinar, we mentioned about the HDFC and HDFC Bank, where we mentioned that there would be, I mean, at that time, HDFC was trading at around 930, and we mentioned that it may form the kind of a double bottom formation, and which we saw into this particular bank. You saw this. This is what you see, and then you see at least 1050 somewhere around here. Okay. So, but at least it has to break the immediate resistance of this particular level, somewhere around 950. So you mentioned that you have a price at around 822. So you have absolutely bought it at right valuation, Gaurang. You can still keep holding HDFC Bank. Any correction towards your buying price will be an opportunity to add for you. Okay, this is what I can suggest for you. So I'll say about Avanti Feeds, this is the right time to purchase. जितेंद्र, yes, yes, जितेंद्र, ये बहुत अच्छा स्टॉक है. At the moment it's at the right valuation. It can be at the potential multi-bagger at the moment. Okay, however, in last week it has ran a lot, at least 25% more it has given. So you wait for certain corrections into Avanti Feeds, and then you definitely will have a good valuation coming into. If you really want me to tell you what is the exact price of Avanti Feeds, you really need to look at, because it has ran a lot, forming again the W pattern again here. So I will request you to at least wait for approximately at 350 level. It is already at 414 now. You wait for a little bit of correction here, and then you can definitely take an entry on to the Avanti Fits. Thanks for the great wisdom webinar. One last question: what about the future of SBI cards after disaster listing? Uh, Anand, thank you so much for your appreciation on the wisdom webinar. However, SBI card from our perspective is still a good bet, and it is going to be the next HDFC AMC kind of a stock. Okay, so if you really look into the long-term investment of the SBI card, I will still suggest you to be there into the SBI card. Okay, it has already started reverting from the support of 578. So this 600 or this particular level is absolutely a good fantastic start for an investment of SBI card, guys. So if you wish to, you can start on a SIP manner onto this one. What to do for SBI? My buying level is 248. Venkatesh, you can start adding on SIP for SBI. It is definitely going to be the 300 plus at least 1 year or 1.5 year down the line. Okay, so you start buying SBI at around 170 or 175 level. Okay, that will be a good level for you. And if it comes down to 148, which is a lifetime the low for SBI, that will be again a good opportunity for you to go ahead. View on TCS. Shivraj Harle. Hi Shiv. TCS is absolutely a good quality stock for you. You can always go on to the SIP manner for TCS. However, the impact of the lockdown on the IT stocks will be a huge, at least for the quarter 4 and the quarter 1. Okay, because the business dealings, the clients subscriptions which the TCS needs to do, that will be and a hit back for TCS. So you may see TCS after the quarter 4 results at certainly at good valuations. So keep a track on to TCS. You will definitely see TCS coming back to a good valuations for you. Okay. So that's it, guys. I have answered all the questions. If you have any questions coming up to you, if you want to talk to me for last 5 minutes, you can have the discussions with me, or probably you may have one-on-one chatting with me onto the Urja support group. Thank you so much for joining this wonderful webinar. I really appreciate your learning desire, your hunger to learn from the core, and your time on this discussion. So you stayed for the last 1.5 hour for the discussion. This is really appreciable. This is what we see, the patience in you. Okay. So you are ready to go beyond your skill sets. Thank you so much, guys. If you have any questions for anything, please hit out our website, urjawealth.com, and go for the courses enrollment if you wish to. You can also join our Urjaa Wealth webinar for the next time. You can also join on to the Urjaa Wealth public channel and track our expertise, track our wisdom there, and then you will be definitely successful investor or trader, I must say. So God bless you guys. Thank you so much for joining this webinar. Thank you so much. Have a wonderful day ahead. Thank you.